All right, John, welcome to Startup Aquarium.
I'm delighted to be here.
Yeah, so we were just talking before this, but you have basically been in startups before you were able to legally buy a pint. So what do startups mean to you? I mean, having been in the game so long.
I think startups are at their core about people looking at the way the world works and saying, I think it can be done better. And going up against, generally, a startup will be going up against much larger companies, sometimes entrenched interests, an existing way of working, and trying to change that. And I think that's why it's so exciting. You're working a little bit against the odds. I think what we've seen over the past 10 or 15 years is people taking this startup mentality to all kinds of industries. We associate startups with technology, right? With internet companies, Google and Facebook and companies like this. But you see a company like Stripe. We work with internet payments and changing how this works. You have a company like SpaceX, a startup in the rocket space, right, deciding that rockets can be built better. And so I think this mentality of questioning the current way that things work can really be applied to almost any sector in business.
Right. So there are people that are looking at startups as one option to maybe accomplish that, versus, for example, big companies. Mm-hmm. So, what would you say are some of the key differences between, pursuing the startup path to accomplish those things versus pursuing the big company path?
I think one of the defining differences between a startup and a big company tends to be how quickly they're growing. Mm-hmm. Where a large company, maybe it's growing 5, 10, 15% each year in terms of revenues. It will also not be growing people that quickly, will not be growing its product lines very quickly. A startup might be growing 50%, 100%, 150% per year. And so it's growing much more quickly in terms of its revenues and also in terms of the new products it's launching, the people it's hiring, what it needs to do. I think for people, that tends to give them, if they're interested in having an impact, in having a broad remit, that gives them a lot of opportunity to do that. Because what's needed at the company is always changing. People get pressed into service, doing new roles and things like that. And so many of the people who have enjoyed working at startups say they really like how much it pushed them, and their role wasn't the same, from year to year. It was always changing as new requirements came along. And so the downside maybe is that it can be a little bit chaotic at times, stressful, sometimes even disorganized. But I think the upside is it really advances people's careers by pushing them further than they knew they needed to go.
Right. So how does that change based on stages? So I imagine, if you're joining a seed stage or Series A stage startup, it's complete chaos and it's changing, basically every week maybe. Versus a Series C or a Series D might be, still fast, but not as fast potentially because a lot of things could break and a lot of risks. What changes in terms of what you look for in talent? Mm-hmm.
I think one of the useful ways to segment startups can be before product market fit and after product market fit. And that's a term people use a lot in the startup space, product market fit. But it really means, does this product work? Right. In that, you or I could, design a product and, we could say, we're going to develop a car and it also has a shower in it, for if you need that, and it also has a couch and things like that. But maybe we discover, it's very expensive to do that and nobody actually wants this product, and, we spend a lot of time discovering it and the product fails. And oftentimes startups, maybe when they are 5 people or fewer, 10 people or fewer, they are still building the first version of the product and they don't know whether it will work yet. Whereas if you have a company like Smart HR in your portfolio, that product clearly works. Right. That is a startup that has discovered that this is something that businesses really need and is very popular with them. There is no question that this is a product that works. Right. And so again, you have this question, are they before finding a product that works or after finding a product that works? Mm-hmm. And I think it can often be very exciting joining a 5-person startup where it's not clear whether it will work yet, but obviously you have to be okay with the risk that it doesn't work. I think oftentimes one of the most exciting environments is finding a startup that has found product market fit. They've determined, okay, this product works, but they're still very early in their journey and they're still scaling up and they can expand to, serving new sectors. They need to continue to grow with their customers and things like that. I think that is one of the best risk rewards these days for investing, for joining a company, things like that, is a startup still at the early stages of its growth, but it has found product market fit and they know the product works.
So venture capitalists don't even know sometimes if a company really has product market fit. How on earth can employees that don't do it full time think about, does this company actually have product market fit?
Yeah, I think it was Mark Andreessen, when asked, how do you define product market fit, said, you know it when you see it.
Yeah.
And that's not a very useful definition.
Right.
But I think, for investors, it is a sense that the product is flying off the shelves, it is being pulled from customers, revenue is growing quite quickly off a material base. And I think similarly for people judging the company from the outside, it's, does this company have a real product in the market that is popular with customers? And I think, with Stripe, say, when we were raising fundraising rounds, I think one of the things that investors did was they called up their portfolio companies and they said, what are you using for payments? And they said Stripe. And they said, do you like it? And they said, it was very easy to get started with and it handles all of our needs for payments and it means that we don't have to worry about that. I think the investor said, okay, this has product market fit.
Right.
And so you can kind of get a sense from, is it seeing real traction in the market?
So when Stripe was hiring in the early days, did you have key employees or potential employees do some sort of diligence like that, where they're, hey, let me see the customer references or something? Like, how are they, figuring out that Stripe was actually, a rocket ship? Yeah.
I mean, everyone did diligence in their own way, but actually a number of our early employees had been customers of Stripe. They had used the product, and so they knew firsthand how it stacked up against the options in the market.
Right.
And we were obviously a startup. It's very hard to hire technical talent in the early days of a startup because it is so competitive. You're competing against big companies, mid-sized companies, everyone, and the competition is voracious for talent. And so one of the things that we did was we would meet our customers at meetups and in the context of Stripe, and maybe if their startup did not work out, we would end up hiring them, and they were already familiar with the product.
Right. Okay. And so, what types of people do you think thrive at startups? Like, what do you particularly look for? I guess it's probably changed now that Stripe is a big company, but in the early days, I'm sure there are certain characteristics that you tried to filter for. What are these characteristics?
Again, we describe that environment where it's high growth, lots of opportunity for impact, but will constantly be changing, and it might be a bit chaotic. And so I think the question is that attractive to you or not? Because I think for some people they would say, that's terrifying, I don't want to go near that. Yeah. And some people would get excited by by it. It's a little bit like the famous job ad that Shackleton took out for his Antarctic exploration. But he basically put out an ad in the newspaper in, I want to say 1910 or something like that, and he said, dangerous mission, extreme hazards,
possible death.
Possible death, chance of success unlikely, great fame fame and glory if we manage to return, which you probably won't. Again, I think he was trying to be upfront with people about what this was. Exactly, and get the right kind of people for this mission. And it's a little bit like that with startups. But I think people who like the variety of the work, people who like the opportunity to have a real impact, people who want to have a lot of agency in their work and the ability to get things done, I think those are the kinds of people who are attracted to it.
Right, makes sense. Yeah. And do you have any final message to folks that are interested in startups in Japan, but still kind of like on the fence?
I think the main thing to think about is that this is probably one of the most exciting times for the kind of the startup world in Japan. I think it's easy as we look at the global economy and the risk of a global recession and things like that to get worried. But obviously you have to keep in mind that firstly, the Japanese startup ecosystem has continued to grow so much. The amount of venture funding into startups has 10x'd in the last few years. But also just many of the world's leading tech companies were started during a crash, right? Amazon and Google and companies like that emerged from the dot-com crash of 2001, and so this is often when really interesting startups are built. And so I would just leave people with the message that this is probably a very good time and a very exciting time.
Right, it's just a blip, right? The noise is gone and people can focus on really building the next generation of companies.
Exactly.
Yeah, thanks so much.
Thank you.
Yeah.